While there are no shortage of risks out there for investors, U.S. markets continue to hit record highs. But are corporate earnings justifying these valuations? Joining us now to discuss, Justin Flowerday, Managing Director, Head of Public Equities at TD Asset Management. Justin, great to have you back on the program.
Thanks for having me back, Greg.
All right, so it's interesting. We do see, I mean, if you pick up any newspaper, you watch any newscast, or I guess young people don't do either of those things. They get their information somehow, but the headlines can, they can be overwhelming, yet the markets continue to power to new highs, and we've got a lot of earnings behind us. What are you seeing out there?
Yeah, so look, we're entering the tail end of Q4 earnings season, and the numbers have been solid, right? It's been a solid kind of set of results. You've seen 12-ish, 13% earnings growth on the back of 5% revenue growth. So, nice bottom line growth driven by decent top line growth with some margin expansion. And I'd say the really positive thing that's coming out of this earnings season is the fact that it is broadening out, right? It's not just big tech. It's not just Mag 7. We're seeing participation from other sectors. Like if we were talking a year ago and you asked me, how's everything going? I would have said, look, it's a tale of two worlds, tale of two cities. You have big tech, Mag 7, generating 30, 40% earnings growth. The rest of the market, kind of 2 to 3. We're now seeing bigger contributions from financials, industrials, utilities, healthcare, and so that's been a bit of a positive coming out of this earnings season. The only other thing I'd mention is just we obviously listen to a lot of conference calls, and I would say there is a tone of optimism that has emerged from management teams on conference calls this earnings season that we haven't seen in some time. They're just very confident about the demand backdrop, right? They're confident about this wave of inventory restocking that's taking place. They're confident about their ability to take costs out of their infrastructure and automate certain processes over the coming years. So look, they're not. You mentioned HUD Bay guidance being negative earlier today. Management teams are generally not super optimistic with their guidance, so they're not saying 2025 is going to be amazing, but their tone is optimistic.
Some of the major themes, I think, playing out against the backdrop of all that, I know you've been keeping an eye on it, and one of them is reindustrialization of the Western world. If we're going to start bringing production back here, what does that mean? I mean, in the longer run, not only for the economy, but for some of these corporations.
Sure, yeah. And look, this isn't a new story, but I think it is something to pay attention to because it's gaining momentum, right? And the reality is we have had an underinvestment in infrastructure in the Western world for the last several decades, and it's really starting to play havoc in the economy and create frictions in the economy. And look, lots of areas to go here. Transportation, for example, is one area that we often speak about, right? There's whether it's aviation or trains or driving or just taking the subway. We have an underinvestment in the transportation networks and a deterioration in the transportation networks across North America. I mean, you and I live in Toronto, and we see the frustrations here. It's not just Toronto.
I have had some difficulties in recent days getting to work and home from work. Just a little bit of difficulty.
Even without the snow.
Even without the snow.
Even without the snow, there's difficulties. And so, look, this is just, again, it's a friction for the consumer. It's a friction for businesses. And there's been I think an understanding and a responsiveness from governments and private companies who are saying, look, we need to do something about this and we need to start reinvesting. And, it probably started with the pandemic 5 years ago. I can't believe that's 5 years ago. When we saw the supply chain inefficiencies. Geopolitical risks have now shown our vulnerability, and so our need for resilient domestic manufacturing and resilient domestic infrastructure is certainly at play here.
So that's the reindustrialization of the Western world theme. Also, I think a lot of people have headed into this year thinking that we'd see some deregulation of certain industries that would help their bottom lines.
Sure, yeah. No, and this is, look, we've had a lot of talk about tariffs, and we've had a lot of talk about trade wars, and I think one of the themes that hasn't been discussed very much has been this theme of deregulation that's taking place in North America and in Europe and in Asia. And if you think about, the U.S., we're hearing headlines every single day. We've heard it more today about just general deregulation of the financial system, right? We're going to see less oversight, let's just call it, of certain sections of the banks in the U.S. Capital adequacy will be probably a little bit more lenient. That's going to be a positive. But if you go to Europe, I mean, there's deregulation taking there. It's taking place in the energy sector. We've had, government oversight of energy prices for quite some time, and I think there's now a real movement which is leading towards more market-driven energy prices. And the last region that, I think this is actually the poster child for deregulation is Japan, where you've seen, and it's been talked about a bunch, but you're still seeing it, deregulation in terms of pension reform, in terms of labor practices, hiring and firing, in terms of the energy system and the financial system. So lots of really positive themes there. The positive here is that, again, it goes back to frictions and removing frictions from companies and consumers. And this just ultimately, if you look historically, deregulation ultimately leads to higher levels of profitability for corporations, which supports earnings growth for the medium term.
We put those big themes together, and obviously I feel like we're living in this world where a constant amount of information coming at us. We don't know what to make of it. But we're speaking about longer term themes here. When an investor thinks about these things, how should they be thinking about investing?
Well, I mean, the way we think about investing is trying to understand where some of these demand tailwinds are going to be coming from, and allocating capital into industries that'll, first of all, have a benefit from long-term demand tailwinds. And then, once you've done that, really it's about finding the right management team and the right company that's going to be able to capture the greatest portion of free cash flow from a certain industry. And if you do that and you try not to get too cute, you can be quite successful over the long term.